The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. Can everybody see my screen and hear me? Hello, hello. Okay, thanks everybody. Good. Let's begin. Today's Monday, August 23rd. This is the E-mini S&P and SPX cash chart review. This is the host, Jason Apple, and as usual, we'll go through Avi Gilbert's nightly update. We have a little bit of a special update tonight in that we have a few different charts to go through. Normally, we are just reviewing the S&P 500, but as Avi's included his 60-minute chart on the small caps ETF, the IWM, and the emerging market ETF, the the EEM. We will take a look at those as well. And let's begin as we usually do, looking at the S&P 500 chart from the March 2020 low. And I will bring us up to the present with a micro chart to show where the counts are in their larger context. And then we can take a look at the opportunities in IWM and EEM that are shaping up for, in Avi's view, for some potential outperformance. So let's begin. Okay, on the larger degree S&P chart here, on the 1 hour chart, going back to the March 2020 low. So we got a major correction into the March low last year, and our thesis is that that correction completed the primary fourth wave pullback, and this is a larger 5-wave structure that's commenced at the 2009 low, and after completing the fourth wave correction into March of last year, now we are working on the primary fifth wave. So that began with an initial impulsive 5-wave move from the March low to the September 2020 high. We had a wave 1, a wave 2, a breakout in wave 3, wave 4 pullback, and a fifth wave up. So this is a standard impulse wave 1. And from there, so this is our intermediate wave 1 of primary 5. From the September high, we got a clearly corrective 3-wave pullback, and as the name sort of describes, you can see here that this is a what is called a flat correction here. So we have the A wave down, very high B wave, which retraces most of the A wave, and also, and from there we got a C wave down. This is called a running flat, where the C wave does not extend beyond the extreme of the A wave. So even though the wave 2 completed at the end of October, the actual low of the A wave took place near the end of September. So in terms of our Fibonacci pinball methodology, once we have the initial wave 1 and wave 2 completion, what we can do is we can measure the length of the wave 1 and extend that upwards from the completion of the wave 2. And that gives us these green Fibonacci lines. So all of these are relative to the length of the wave 1. So for example, here at the 0.382 in this green Fibonacci line at 37.67, that means that the length between the end of 2 and that level right there is 38.2% of the length of wave 1. And so our Fibonacci pinball methodology has some standard regions we like to see for each of the subsequent wave degrees, and that offers us some idea as to where these might land, some general regions that we can look for targets and pullbacks. And it sets the parameters for really for the rest of the parentheses wave 3, 4, and 5 and their subwaves. So typically after the 1, 2, we see a wave 1 that targets the 0.382 to 0.618 extension of the wave 1. In this case, this came right up to the 0.500 extension here and pulled back correctively into the March low. And from there, we can engage the same process once again, where we measure the length of this minor degree wave 1 and extended upwards from the end of this wave 2. And now what we can do is look for confluence between the larger degrees. So once we have this minor degree 1, 2, once again, we're looking for the 0.382 to 0.618 extension off of that low. And in this case, our wave 1 here came just shy of the 0.382, close enough. Again, these sort of standard target regions here they're not rules per se, but they are general guidelines. And this came close enough and got another clearly corrective 3-wave pullback into the late March low. From there, we have another 1, 2, and 3 waves up and a 4th wave pullback. And then what appears to be a very protracted ending diagonal wave parentheses 5 of wave circle 3. Again, the 3 of 3, given that we came just shy of the 0.382 for the circle 1 of 3, that wave degree should have targeted the 1.0, and we did exceed that target, so we have reached it. And off of the high earlier in August, we had a sizable pullback, not so much relatively speaking, but we had a decent pullback into the low last week, and now have rallied in 3 waves in what could give us an extension here in this wave circle 3 in our alternative yellow count, or we could be getting a high B wave here. Please remember that B waves, though corrective, can extend beyond the previous high of the motive wave, meaning they can retrace beyond the 100% of the A wave and still be a B wave. So if this is in fact a B wave, we should see price turn down at some point this week, possibly as soon as tonight and into tomorrow. And we want to get a micro 5-wave move. If I were to zoom in, for example, we'd want to see something like this develop. We'd want to see a 5-wave move down. And if we get 5 waves down, that's a very good indication here that we have started the C wave, and that initial 5 down, the circle 1, 2, 3, 4, 5 can be Roman numeral 1 of C, and then we should get a corrective retrace that remains below whatever high preceded the 5 down. Alternatively, should we see a corrective 3-wave move, here, I'll come into the micro chart for that. Our alternative here is that we're getting another extension higher, and so this ABC is an A wave up, and we get a corrective move back in a B wave here. That should look something more like this. There would be an A and a B and a C, something like that. Should we see a corrective 3-wave move? Again, that's going to ideally hold support that shouldn't get below 44.10 region, SPX. We can get maybe a little bit below the 618, but once we start to break below that, it will start to favor the green count down. But again, to strongly favor the green count that we're heading down lower in a C wave, we do want to see a 5-wave move down. But again, below 44.14 starts to put, even though it's already the alternative count, it does put this this potential alternative count to an even, would be an even lesser favor at that point, as it'd be getting a little bit deep for a B wave pullback within an extension up higher into the 4550 to 4600 region. And again, as per the the bigger degree chart here, we'd still be expecting a big pullback, but it could come from the as high as the 4600 region in mid-September, or perhaps this becomes really protracted and extends all the way out to October. I don't see that as likely, but again, for those of you who are new with us, and for those of you who are a little bit less familiar, Elliott wave is not primarily a market timing tool. It's primarily used to analyze price. And so, should we get this higher high, I could see that extending out into the middle of September. And then from there, we would still be looking for a wave 4 of 3 pullback here into this 4165 to 4270 region. So that's it for the S&P 500. We're going to move on from there to the IWM, and then we can take a look at questions here. So in the IWM, well, I'll just go back to the beginning of March. We have a leading diagonal wave 1 here in the IWM, and so that's still a 5-wave move, but it occurs rather than waves 1, 3, and 5 each being 5-wave moves in themselves. Those are corrective 3-wave moves that form a bigger 5-wave pattern here. So, and in this case, it's not necessary, but we often most typically see overlap between the waves 1 and wave 4 in the 5-wave diagonal, whereas in the standard impulse, we do not see overlap between waves 1 and 4. So we got the initial 5 up into the June 2020 high, and then Avi's counting this as a very messy running flat here, where we got the initial, we're not counting this as an ABC here because the move from the high, the last leg was only a 3-wave move, and C waves are 5-wave moves. So WXY, rather than being a 3, 3, 5, are a 3, 3, and 3. So this W actually can even count as a 5-wave move down. We have a corrective 3-wave move up, and then we have another 3-wave move down here. So this Y wave is more like an A, B, and C. So we have wave 1, and we measure that, and then we extend it up from the completion of the wave 2 here in September, and we got a 5-wave move in right into the 0.382 extension. We got a wave 2 pullback, and then from there we have we got another wave 1 and wave 2, and then Avi has us having topped in wave 3 at the February high. And from here you can see, for those of you who have been following this, Avi and Mike G and I believe Zach posts on this occasionally, and myself, we've been covering this for, basically we've been in a consolidation for over 6 months at this point, where price has gone nowhere. Avi is counting this as wave 3 having topped here in February, and we have an A, B, and C down for the A wave. We have a B wave into the June high, and then we have a C wave down. And now we are working on a 1, 2, 3, 4, 5 for a leading diagonal wave 1 of wave 5. The alternative would be that we still get one more low here down to the bigger 1.0 extension around the 200 region. And so, really at this point, any break below the August 20th low is going to favor that. As it is, this is a pretty deep wave 2 retrace, so not so unusual there. But so long as this holds, what we'll be looking for is a 5-wave move up, and then we can buy a 3-wave retrace here for the wave 2 with a stop below this low to add positions. Avi has been mentioning the prospect, even if we do get the lower low, that the risk reward here is so favorable, as the next larger degree target in his work is up north of 280, and so potential to add in this region here is quite good. And should we see a lower low, that the IWM follow down at the 4th wave with the S&P on a little bit more sort of proportional basis, that we can see this lower wave 4, that's another opportunity to add. But otherwise, possible here that while especially if we get a little bit higher, the IWM can, especially if we get the yellow count in the S&P, the IWM can finish its wave 1 while S&P is finishing up its wave 3, and then while the S&P and the NASDAQ are pulling back in a bigger degree 4th, that the Russell just pulls back in a more shallow basis for a wave 2. But alternatively, we can just head down, more directly, especially if the S&P does follow Avi's green countdown and we head more immediately to a lower low, down into the 4,200 region. Not unlikely at that point that the IWM would follow this down and give us what Avi's considering his alt wave 4 down to the 200 region. Lastly, we have EEM. Avi's counting this off of the 2009 low that we completed the cycle. Sorry, this is actually the 2008 low in the emerging market, that we completed the cycle wave 4 pullback into that low. So that is a very, very major pullback. And then we have a 5-wave move up for the wave 1 of 3. The primary wave 1 of cycle 5. And then from there, we have the wave 2 pullback into the 2016 low. And then we have wave 1 of primary 3 into the 2018 high, a deep wave 2 pullback into the March low of last year. And now we have what probably counts best as a 1, 2, and 3 waves up off of that low. Came a little bit shy of the ideal 1.0 extension here, and now is pulling back in its 4th wave and can give us a 5th up to complete intermediate 3 of primary 5, ideally up into the 67 region. So that would be quite a bit of outperformance for the next rally here. And overall, we can be looking up to the 80 region, roughly, or at least 72, but more likely north of 79 or 80 for the primary 3. I should note. So this is Avi's count. Garrett and Zach and myself have a different count. I would consider the possibility that instead of this being a 1, 2, 1, 2, that this move looks more like 3 waves and it's right into the 0.764 extension, which would mean that this is somewhat academic, but essentially that would mean that we're looking for an A wave here, and this was a B wave down, and this is a C wave up to the 1.236, and we have a 1, 2, 3, 4, and 5, just the same, but instead of this completing a 3 and then getting a 4, 5, that this would complete all of the primary 3 here in the 67 region. So, for those of you who are playing this setup for a little bit longer term, I as well am playing this setup. I've started accumulating some EEM. I will be targeting the 1.236 to, roughly, let's say the 67 to 72 region here. I think that's reasonable that we reach that. However, assuming that the market does follow through on the larger degree bullish thesis here and equities continue to head higher, but I will be taking profit in this region, in the 67 to 72 region, as I think this could be the top of primary 3 rather than just the 3rd wave and then getting a 4 or 5. Again, I'm concerned this could be playing out more as a diagonal there. But in either degree, we're looking for a significant top. Supposing that we hold larger degree support here, we can head up in the 5th of 3rd or the 5th of C of primary 3. And in either case, we're looking for a substantial top. In what I'm showing here in orange, it would be a slightly more substantial top, as it would be completing a larger wave degree. Whereas in Avi's count, we should still probably get a pullback to the low 50s, and then would get the 5th wave up to the 80 region. So, but either way, I think that that looks quite good there. And Avi's just illustrated this a little bit more in the micro, that we topped in the minor degree wave 3 in February. We got an A wave pullback. A very messy B wave. He's counting this as an A, and expanded flat BC for what would be a greater A wave, but the overall pattern is a 3-3-3, so this is a W. Then we have a 3-wave pullback for the X, and then we have a 3-wave Y wave, and that's for the B. And then we're working on an ending diagonal C wave. Possible that that's completed at last week's low, but more ideally for the pattern, that he's counting where we have an ABC wave 1 down, wave 2, and ABC for wave 3 to the 1.236 extension, a wave 4. Ideally, this is just the A wave down of the 5th wave, and we can come up a little bit higher in a B wave and then head down in a C wave into the 47 region to complete that correction. And I think on his chart, he has this as a buy. I believe he has that. Let's see here. Oh yeah, he has that as the buy box. Okay, that's anyhow. So that's it for today's coverage of Avi's counts. Let's take a look and see what questions we may have. Does anybody have any questions about the S&P or the IWM or the EEM or Elliott wave questions that we can take a look at here? We won't do any chart requests though. We just cover what was in Avi's update. Let's see, Jason asks, best case for upside on the SPX before we turn lower, is it 4,500 or 4,600? So we don't really have a super clear pattern here on the, given that we're in this very protracted ending diagonal here. And so in this case, we're really working with the larger degree fibs, at least until I would say we get, for example, if we get this pullback and then we get, if we get this corrective pullback as the yellow count portends, and then we get a wave 1, 2 up of the C wave, that will allow us to start forming some confluences with the larger degree. But at this point, the next larger degree fibs are in the 4608 to 4630 region. So I would say in terms of, what's reasonably the highest that we may extend before a pullback is to that region. Now, if you're asking that question from the perspective of, shorting, that's problematic because, given that the larger degree trend is upwards, it's highly unexpected that we would get significantly beyond the larger degree 1.0 or the smaller degree 1.236 here. Price can extend higher. It's when we have targets, bullish targets in a bull market, those are targets that we expect to be met, but often price may exceed those, and that, if you're trading with the trend, that's of course not problematic. In terms of shorting the market, that becomes very difficult because you don't have a clear invalidation point. I will be posting on the board what I like to call my recipe for a good Elliott wave short trade in the market. I can tell you from being on the board now for I think about 7 years, these what are anticipated as B waves within larger wave 2s or larger wave 4s tend to be where a lot of members are challenged because they're looking to short these, and they just start shorting into resistance for the B wave, which is inadvisable. I can tell you, I know this because I've done this from experience, and certainly have learned my lesson as the market has not been kind to those who have not shorted, those who have shorted and those who have not shorted well over the past several years. So if you are looking for a short trade, if you feel you must trade this short, the best thing to do is wait for the A wave down, wait for the B wave to complete, and you'll know it's complete by it getting a 5 wave move down for the wave 1 of C, and then you can short a corrective bounce in a wave 2, and you have a clear stopping point against the top of B. So really, until you get a 5 wave move down here for a potential C wave, you don't really have a short setup. You know, for those who have, there's plenty of people who have announced on the board that they've started shorting. If you're short in here, you know, if the market does just continue to melt up higher or just grind up higher, that can be quite painful. In particular, if you're in options, as you're losing both, you know, delta and your, you know, your theta premiums there. So it's advisable to be very cautious about that. And you know, if you feel like you have to short, I would question that assumption to begin with. But if that is something you're looking to do, you want to be trading with very tight stops, or you know, the best thing to do is to follow the recipe, which is to wait for the A wave down, wait for the B wave up to complete, wait for the wave one of C down to complete, and then finally you can execute a trade to short on the wave two bounce with a stop above the B wave high, giving you clear parameters for a C wave, a clear stopping point, and a good risk to reward skew for the trade. Okay, do we have any other questions? Is that it? Let's see. Jason asks, given the potential for a melt up, would the potential drawdown be more than 200 to 300 points? Not necessarily. So, you know, if I zoom out to the larger degree here, for example, keep in mind that fourth waves typically retrace between 0.236 and 0.382% of the wave three. And so, you know, right now, if we have a high end for the third wave here, as per the green count at last week's high, the 0.382 is at 42.40, okay? But if this extends higher, let's say to 45.50, for example, and we top there, we're still only looking then down to 42.84. It's, you know, it's a little bit more of a pullback, but again, we also have the prospect of getting a shallower wave four, which only retraces 0.236. Or if we come all the way up to 46.10, for example, we'll be expecting down to 43.20, but we have the prospect in that case of getting a shallower retrace only to the 0.236 back here to the 44.30 or 44.40 region. So again, you know, just trading short, you know, hoping to nail the top of a third wave and catch it at the bottom of the fourth wave does not tend to be a winning strategy. The market has mostly punished, you know, those who have traded short over the past several years. You know, we've had a few really good, you know, downside moves over the last 7 years, but you know, there certainly have not been dozens and dozens of them, and so it's been much more difficult to trade the short side. And again, that is why I show here the recipe for it, because you know, even if we do get a more muted pullback here, if we do get a lower low in the C wave here, we get something of a clean setup. We can theoretically get something of a clean setup for it with a 5-wave move down and a corrective retrace. And then again, you know, we get clear parameters here versus, you know, just trying to nail the top. So. Okay, that appears to be all the questions for today. So thank you everybody for attending, and we'll be back on Thursday later this week. And good luck in your trading for the rest of the week. See you then.